U.S. Large Cap Granny Shots ETF. This is our update for the Granny Shots ETF for the week of April 11th. I want to cover some particulars before giving you some macro thoughts and some thoughts on some of the Granny holdings itself.
Bitcoinzilla stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoinzilla today and enjoy the new edge. In this video, Tom Lee will talk about why $NVDA P/E shows strong risk/reward even after H2O setback, $TSLA market moving reports next week, and $MSTR seriously washed out. Let's catch him up to know more now.
The price as of April 11th was $17.67 and total assets of $829 million. Over the past week, Granny Shots rose 8.47% compared to a 5.73% rise in the S&P, or relative performance of 275 basis points. Like last week, I think it's important to focus on the macro because correlations of stocks have increased, and so I just thought I would give you our latest macro thoughts. The first is, I think that there are signs, and I'll explain why, that stocks have shown evidence of a bottom. I think it's a structural low decisively, and it's possibly the low for 2025. Here's a price chart of the S&P over the past week, and as you can see, the S&P was 56.69 before Tariff Liberation Day, fell to a low of 48.35 on April 7th, and has recovered somewhat to around 5,300. And we think that there's still roughly 2 to 3% upside in the near term towards 5,500. Now, the S&P has pulled back, but as you can see, it is moving along this near-term trend line. So again, I wouldn't turn too bearish near term. Stocks fell earlier this week, and this has to do with on April 16th, Wednesday, when Fed Chair Powell spoke at the Economic Club of Chicago. Now, he said something consistent with his last appearance, which was at the NAB Business Writers Forum. He says that the Fed has to be patient here because they just don't know what the effects of tariffs will be on either growth or employment. And until they have an idea what the tariff policy is, the Fed has to be patient. Now, that didn't sit well with the president, who this morning said the Fed is too late and too wrong, and he's citing the ECB, and the ECB is actually making cuts because they view tariffs as a demand shock. But I don't think what Powell said is actually sitting poorly with markets. What I'm highlighting here is that when Fed Chair Powell spoke on Wednesday, long-term interest rates, the 10-year yield actually fell. That's in contrast to his same exact comments that he made at the NABE on April 4th, where yields actually rose. So literally he makes the same comment, but 12 days apart, yields actually fall. I think that's a good sign.
Bitcoin's recent rebound of 14.6% after tumbling below $75,000 has offered hope. But its inability to decisively clear the $85,000 hurdle has traders on edge. Bloomberg's Mike McGlone warns that a resurgent trade war and soaring gold, inflation hedge of choice, could drag BTC down toward its 200-week moving average near $46,300, potentially seesawing toward the $50,000 mark if safe haven flows persist. Gold's fresh high above $3,100 and $27 billion of ETF inflows this year stand in stark contrast to the $12 billion pulled from Bitcoin funds, signaling a classic flight to safety. On-chain metrics add to the tension. Short-term holders now shoulder unrealized losses, reminiscent of 2018's early bear market, while long-term investors remain buoyed but vulnerable if weakness endures. Each sideline move by aging top buyers threatens to tip the scales toward capitulation, especially as unrealized losses shift into the long-term cohort. Still, not everyone sees an imminent crash. Plan B stock-to-flow and 200-week geometric mean models suggest that this pullback mirrors historical consolidation phases that preceded prior surges. As Bitcoin sits 7 months into the bullish red dot window ahead of the next halving, history hints at a launchpad for a rally toward new highs, rather than a prolonged breakdown.
More importantly, the VIX did rise on Wednesday to 32, but that's well below the VIX levels that we saw over 50 on April 7th and April 8th when the S&P was at 4,800. What am I trying to get at? I think the stock market is in a better place today than it was when the S&P was at 4,800. Just recall there was a lot of panic, there was a lot of fear, yields were rising. It didn't look like the president was going to budge. Remember the talk from Howard Lutnick about he's not negotiating. Well, things have changed, and that's why I think stocks are in a better place. But there is some significance to the fact that the VIX was at 60 and now is at 31. Let me explain. There's 3 numbers I want to highlight. The VIX was at 60 on April 7th. And then on April 11th, the VIX closed at 37.56, which is an important level. And then earlier this week, it closed at below 31. Okay. Why is that? Well, there's an old adage that says you buy stocks when the VIX is greater than 50, and good things start to happen when the VIX falls below 30. The VIX above 60 has only happened a handful of times. It happened, of course, this past week. It happened during COVID, and it happened during the GFC. Well, let's look at the GFC. Let's use those 3 dates or those 3 levels I marked. The VIX above 60, which was October 2008. The VIX falling below 37.56, which didn't happen until January 09. And the VIX closing below 31. Well, importantly, when you close below 31, you were past the low because the low was March 09. During COVID, the VIX didn't close below 37.56 until March 24th, 2020, and it didn't close below 31 until April 2020. But you were already past the low. That's why I think it's important to consider that some important structural low took place this past week. Okay, so I think that we're still in a bull market. I'm just not clear if it's a V-shaped recovery like 2020 or it's a range market like 2011. Intuitively, I'm going to say that it makes sense that we made a bottom, but we may be range bound for a bit. And that's because people are worried that there's other shoes to drop. I mean, the tariff war with China could turn into a Cold War. Investors are going to worry about the ripple effects from this shock leading to a global recession. These are extreme views, by the way. That some people are going to worry about a financial crisis from all this deleveraging. And inflation expectations could surge to an extent that we get greedflation. Remember, that's like companies basically raising prices, and it's going to force the Fed to hike. And of course, if estimates fall from more than 20%, stocks have downside because the stock market already had a 20% drawdown.
Michael Saylor, executive chairman of MicroStrategy, has doubled down on Bitcoin as the defining investment idea of the 21st century. Speaking on April 20, he framed Bitcoin as the ultimate expression of digital transformation, likening its scarcity and resilience to land while surpassing traditional assets with its borderless, permissionless design. Drawing parallels to Apple, Microsoft, NVIDIA, Google, and Meta, Saylor traced the past 3 decades of technological revolution through digital adoption across industries, then positioned Bitcoin as the next frontier in the evolution of capital and property. Emphasizing Bitcoin's immutable supply cap of 21 million coins, he argued that its deflationary structure guards against dilution and inflationary pressures that plague commodities, bonds, and real estate. He described Bitcoin as pure economic energy, praising its immunity to geopolitical meddling and regulatory constraints. This narrative complements his release of 21 Truths of Bitcoin, a manifesto that portrays Bitcoin as an ideology, a network, a commodity, and an ethical, indestructible store of value. Saylor's unwavering advocacy warns skeptics that ignoring digital assets risks marginalization in a rapidly digitizing economy. By calling Bitcoin the cornerstone of modern investment strategy,
He underscores his potential to reshape global finance. His vision cements Bitcoin's role in markets. And do not forget to subscribe to Fundstrat. The most important news will reach your inbox on a daily basis and for free. I do not know why you have not subscribed yet. If you like the video, give it a thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.